Hi folks, it's 3 Minutes with Morag, where I'm trying to simplify and demystify accounting terms and procedures. Okay, so hopefully you all know me by now. My name's Morag and I run Northwest Numbers Limited, where I provide bookkeeping and accountancy services for small businesses, charities, not-for-profit and start-ups. What I want to talk about today are the accounts that you should be most looking at. Now, the big one, the obvious one, is your cash in bank, because you need to know whether you've got enough money in the bank to be able to spend. You need to know where you're going with your figures, etc., etc. So bank is top priority, but there are other accounts that are equally, at least equally as important to keep an eye on. So obviously, the next one I would say is where it's about your accounts receivable. So that's like your sales, your customers, and basically whether you've invoiced them, whether you've got the money in, how long has it taken to get your money in, are there better ways for you to get your money in, make sure that you're chasing up on those ones that have not paid, because that's your cash flow, and if you have no cash flow, you have no business. For those of you that have businesses where you have products or inventory, some stock of some sort, that's important as well, because that's obviously your lifeline. If you run out of stock, you need to monitor your stock levels. If you run out of stock, you've got nothing to sell. It's as simple as that. So make sure, and also not only that, actually you're recording it in your books, but remember to do occasional physical checks on what your figures are and that your figures agree with your accounts, because it's possible that actually some of your products have gone off. Well, you're not going to be able to sell those, or you're not going to be able to sell them at full price, but you need to know that what you've got in your accounts is what you're actually got available for selling, and that they're good, useful for you. Okay, so next one is your accounts payable. Now, none of us exactly like spending money, but it's the way of the beast. Okay, so making sure that you're tracking the bills that are coming in, that you're making sure that you're paying them on time so that you're not getting a bad credit rating, making sure that you're not paying anybody twice, because that happens. Sometimes they send in quotes, but then they send in a real invoice, and a number of times I've seen both are paid. If you don't pay your suppliers, they ain't going to give you what you need. You're not going to have the supplies, etc., that you need to run your business. So it's all of that is important. Okay. Next, so what's the next important one? Quite a lot of us as business people, we may well have to take out loans in order to help our. Sorry, my actual self hand thing keeps falling. Quite a lot of us may well have had to take out loans, and it's really important to make sure that your loan payments are being paid at the right time, and that you're correctly recording them so that you know when they're due to finish. But not only that, it's also important that you monitor what interest has been going on those, so that you can account for that in your books as well, because it may only be a few pounds, but if it's like a 10-year loan, that could add up to quite a lot of money that you're actually not recording in your books. Okay? So what else is important? Sales are important. Of course your sales are important. You need to know whether you're making any, and if you can, also which are better for you, which have a higher profit margin for you. How well are you doing with different ones? Are you doing better with something that you're actually not making a lot of money on, or are you doing better with like the higher money ones? Do you need to decide that you're going to concentrate on a particular product because it brings you in more money, it brings you in more kudos, whichever. So you basically need to know what your revenue is and how much you're collecting. Okay? Now, obviously the opposite side, sorry, I've got an itchy ear. The opposite side of your sales is your purchases. You need to be able to understand what you're paying for each of your items. If your purchase price goes up, you may have to increase your sales price, because that you want to be able to try and get it back somewhere. In a short term, you may actually be able to take that hit on the margin, but it's something to keep a monitor of. So make sure that you keep an eye on your purchases, what levels they are, what costs you're paying for each item, etc. Okay? Another fairly important one to keep an eye on is your payroll expenses. Not only is it because it's actually a very big chunk of most labour costs are a very big chunk of most expenses of most businesses, but it's also about making sure that you're following all the government regulations, that you're paying your tax and etc. on time, that you're paying the minimum wage, that if your employees are needing to take maternity leave, etc., that's all covered and that you're following the legislation. So that's important. Another big chunk of expenses is usually for running your back office, your office expenses. These are it's another key expense, isn't it? That kind of drains out of your profit. So what can also happen is there can be lots of, you think of them as just pen. Let's say we're talking about stationery. We're talking about pens, papers, etc. They don't seem that important in themselves, but each pen, when you start adding hundreds of pens together, it can become quite a big expenditure. When you on top of that is your printing, your paper, etc. They may be low level priced transactions, but they add up. So do make sure that you keep an eye on that. Okay, now from a business owner's point of view, if you're not like a company where you're talking about shares, etc., a lot of businesses are either sole proprietors or they're partnerships, etc. So what's important is making sure that you're what's called your owner's equity. So basically, it's important to keep a record by partner, by owner, what money's been put in, what money's been drawn, so that you know who's put what into the business and what capital levels are for each of the owners, each of their partners, each of the holders. Okay, so keeping a record of every transaction is important, so that you know that, for instance, if you for any reason break up, you know which each partner's liability and what can be taken out by each partner should it all break up. Okay, and then obviously the last one is about your retaining your profits and losses, retaining your earnings. A lot of the time, obviously, your retained earnings are the income that you decide to your profit surplus that you've decided to keep in the business to help with the growth of the business. So that's called retained earnings. It's cumulative. So basically, at the end of last year, you might have had a retained earnings figure. You've got your profit, surplus, loss, deficit. For this year, you add or take away that from your last one, and that's your new retained earnings. Okay, so it helps you know over time how well or bad you've done. The other thing to look at is potentially, have you got enough should your business go out of business? Do you have enough retained earnings to cover you? If you've got staff members, for instance, you should have at least 3 to 4 weeks salary that needs to be covered, it's best to have at least 3 months costs of a business left in your earnings, your retained earnings, so that you can take 3 months to roll down if you need to. Okay, so I hope that was helpful. As I said, my name's Morag. I run Northwest Numbers Limited, and you can get in contact with me by email at accounts@northwestnumbersltd.co.uk. Please also watch my 3 Minutes with Morag, Tuesdays, Wednesdays and Thursdays, and I hope this has been helpful to you. Take care. Bye.